Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. Frank here coming to you with a market recap for September 13th. It is a Thursday. There was an awful lot of bullish activity in the market today. That is for sure. But not everything had a great day. So we'll take a look and see about the day that was. Quick note, Adobe is reporting earnings after hours today. One of our S&P 500 companies, of course, so we will want to check in on that pre-market tomorrow, see what they decide they want to do. Certainly some really interesting things happened in the market today. You saw Kroger gap down on earnings this morning and finished the day almost down 10%. Just really had a rough go. Earnings can be crazy. That's why we always want to be prepared for them, right? You also saw a little bit of a breakout, a gap and a breakout over on international flavors and fragrances. Gap up on the open, basically pushed through resistance and kept running all day long. Of course, we saw that big winner yesterday was Discovery Inc. Breaking out yesterday with a lot of follow through over there as well. So a lot of very interesting things happening. We also saw the healthcare sector, as we'll see, broke out today too, and a lot of really bullish breakout potential candidates over in the healthcare sector right now. That's for sure. But before we get into that, let's just see where we are with our overall indexes. Let's go ahead and start with the S&P 500. This is why it's so important to do our technical analysis, to understand that just because we want it to go straight up or down if we're in bearish situations doesn't mean it's doing anything wrong. If it's not, the S&P continues to push up. Very strong day for the S&P here today, that's for sure. Working our way towards that little resistance level. That, of course, is our all-time high, our swing resistance level. But really, we stay very bullish over there. NASDAQ really was on fire today. A gap on the open and pretty much ran. Again, it kind of comes down to trusting our charts, trusting our eyes, right? There was some back and forth over these last few days at that trend line on the NASDAQ, but it never breached, it never did anything to say that this trend's over. And well, here we are today. It's a very strong day over in tech. Did pretty okay in our Dow Jones too, actually taking out that previous swing level of resistance by a bit. Of course, we still have overhead on the Dow Jones. We're a ways away, but we do have a little room to run there if we can hold that breakout. Russell, on the other hand, just can't seem to get going. Nobody seems to be interested in the small cap segment of the market right now. It's not really doing anything wrong as it continues to consolidate now for over a week on that breakout point. But we're seeing a lot of bullish activity in our other indexes, and the Russell just can't get going. But again, as long as we hold this support, it's not doing anything wrong just because it's not bouncing immediately, right? That's what we probably like. That doesn't mean it's failed that breakout point or anything along those lines. So overall, pretty strong day in our overall market. In materials, we have, of course, our friends in the materials sector who just really, they move and don't go anywhere. I know I say that a lot. We had a pretty strong day. We had a very strong day going on for a while before kind of giving some of it back as the day progressed. We continue to find ourselves within this trading range, though. There's no two ways about that. I haven't broke support. I haven't broke resistance. So for me, I continue to be neutral within this sector. Energy really was not able to build off yesterday's gap. As a matter of fact, we looked at those candles in crude and in energy yesterday, and even though we were up on the day, we saw some bearish momentum going into the close. That did carry over into today. Now just flip that around on its head. We did come off of the intraday lows today, pushing up and closing with some intraday strength. So I don't know that energy is quite sold on what it wants to do just yet, personally. But I felt that way for a bit. And so no surprise, I haven't changed my tune all that much in one day. So taking a look at the financials, they were one of our weaker areas today. No two ways about it. They failed that little swing support / breakout point yesterday, continued to push down. The banks in particular really struggled today. They were not, SunTrust Bank was down, I think something like 4% or something like that. It was definitely one of our weaker areas. Can't really like the way that chart's going. I mean, we're still, I don't know if I'm going to say super bearish, but definitely I'm not bullish on the financials right now. Industrials, though, continue to push through that breakout point. They've actually been very strong as of late and continued that nice upward momentum here today. On the industrial ETF, we do have a little bit of resistance in the $79 range that we'll want to keep an eye on. But certainly today, very strong. Our chart overall very bullish over in the industrial sector. Of course, tech, big winner today, coming off of that trend line, much like the NASDAQ. Seems pretty exciting in the tech sector. I know we've been watching for that pullback, planning for that pullback, talking about that pullback for a while now. Nice to see some pop these last 3 days. Not so hot in our staples. Didn't really struggle tremendously, but did not ever really get going. Now we know that we are at that resistance level. There were certainly other areas that buyers were getting into, healthcare, tech, utilities were some. Really didn't do anything wrong, but really kind of ran out of steam here at resistance. Of course, that never surprises us here at Tackle Trading, right? We know resistance is tough to break. Continue to monitor that. Overall, we still do remain in pretty good shape. Just struggling at resistance here today. No two ways about that. Utilities, strong day, pushing up towards that resistance. Actually have a little bit of a potential cup and handle pattern going on here. Developed relatively quickly on the utility sector. So we'll want to keep an eye on how we react to that resistance. We have been overall a little bit sideways since we broke out last month, but this can be, a break of a cup and handle can be a continuation pattern. So let's see how we fare at that resistance in the coming days over in the utility sector. Very strong day in healthcare. As is often the case, right? This is why we do this every day. Healthcare has been kind of boring the last week or so, right? As we've looked at it and said, it broke out, but it's kind of consolidating. We never know when that day is going to happen, when it's going to break out again, right? We were prepared. Hopefully we had an opportunity to take some trades if we wanted to within the sector today. Obviously, we're at all-time highs over in our healthcare sector fund here. Very strong. Things are looking good. We're seeing a lot of breakouts in individual companies within the healthcare sector and a lot of companies that are approaching resistance as well. So take a look at that if that interests you, but we still remain pretty much red hot over in the healthcare sector. Really not a lot of good, fun stuff, really not a lot of anything over in discretionary. Continued. Technically, I think we pushed right above resistance, but I don't think I really would call that a break other than technically by definition. Not a lot of interest over there today, but again, that's not necessarily a bad thing, right? There were other things that were getting the buyer's interest today. Didn't do anything wrong. We are at or just barely through resistance, so our chart does still look very solid over in the discretionary sector. Real estate's getting awfully close to testing another run at that $34 range that's caused us problems. Much like our healthcare, we can be prepared if this does break out. What do we want to do, if anything? What's our game plan? So let's see how we react to that resistance going into tomorrow, or maybe even next week. I don't know that I never expect resistance to break tomorrow, but tomorrow's just on a Friday. I wouldn't be surprised if it doesn't break. That's for sure. So pretty solid day all around in the market. Financials definitely showing some weakness. Kind of boring, flat day over in discretionary and staples, but tech, healthcare, really, utilities, even real estate, all had some pretty solid days. Also had some pretty interesting developments early on in the gold market. We ran pretty darn close. I think we got to 12.17, maybe even 12.18. Of course, we know how important that 12.20 is for our gold chart right now. Pushed up, looking like it might be taking another run, and it did. And of course, the reason why we identify resistance is because it's hard to break. It failed and was knocked back down, all the way back down to 12.06. So it was pretty interesting to follow, especially on an intraday basis, in my opinion, today. But really nothing changed. Our chart is the same chart it was yesterday. If you are open to a bullish breakout of that 12.20, you probably still are, as you were yesterday. If you're bearish, well, the reasons you're bearish is in large part that 12.20. That wasn't breached, so you're probably still bearish today. But it was kind of interesting. It looked like it wanted to take an honest go, and it did. It just is hard. It's hard to break resistance. That's for sure. Silver was not nearly as exciting. We continue to kind of trade within this little trading range that we've developed now for a little over a week. Overall, we know how bearish we've been, but really in the short term, we continue to consolidate back and forth over in the silver's market. The dollar definitely continued yesterday and really all week long's weakness, pushing down even further today. We're starting to get towards that bottom area of our trading range. We got a little ways to go. We're kind of at our little most recent level of support, but when we're kind of going sideways, we have a little more room to the downside there. But now, much like we saw in natural gas last week, as we approach those floors, don't be surprised to see some of that money take some profits, right? I know that's kind of where my brain would be. But overall, we still are very sideways. Big picture, short term, continue to show bearish movement on the dollar at this point in time. So keep an eye as we work closer to that support. But that's where we find ourselves here today. Speaking of natural gas, they really built off of yesterday's bearish candle. Again, another one of those candles jumped up really in the early going and sold off much of the day, closing down. A lot of negative momentum. Really kind of saw a similar situation happen here today as we continue to push further downward in our natural gas. We do want to make sure we are paying attention to that support zone. We've already seen that be important on several occasions. I know we're a ways away from it. I think you could argue that there's a bearish play on natural gas working back towards that. But if you do find yourself on that side of things, do pay attention to that support zone. That has been very strong for it as of late. Always want to be prepared for that. And then crude, of course, it failed its breakout again. Yesterday, another one of those candles that broke out. We called it a breakout because technically it was a breakout. We didn't like the way that candle closed because we did see a lot of negative momentum before the day was done. This is why it's important to basically get that second day of confirmation. Right? If this thing starts up and gets moving today, maybe it's a different story, but that never happened. We basically started down and just down all day long as well. So we're basically right back in this same old pattern that we were. We're failing our breaks. It's having a heck of a hard time. But the thing is, and I felt this way, and I know I'm not the only one that's felt this way. Even though we've seen these opportunities, in breakouts of crude at 70, it's never really felt very good. And talking with Matt and Tim, we couldn't really. They can't either put their fingers exactly on it, but none of us really have trusted it. And I know a lot of traders have felt that way. And at least right now, I'm glad I haven't trusted it. So, but of course, that might change by tomorrow, right? Of course, we do know that continues to be an area that's causing it trouble. And until it can get through it, it's just going to be hard. And the tougher it is to get through it, the tougher it gets. Sooner or later, nobody wants to be involved. So even if it tries. But a very bearish day. We aren't too far away from that little support level that they've been using, but really can't say anything bullish about crude here today. Certainly very bearish situation in the short term over in the crude market right now. So that, ladies and gentlemen, is where we find ourselves after a pretty exciting day in the market. As always, it is certainly my pleasure, and I do appreciate everybody's time. If you haven't already, make sure you do subscribe to the Tackle Trading YouTube channel and hit that notification bell so you can be alerted to any new videos that we put up on our channel. I always love to share them with you. Be sure to follow us over at Tackle Trading on Twitter. If you did enjoy the market recap and find it helpful, it is always appreciated and helpful if you do give it a thumbs up to let us know that you're liking it, that we're on the right track. With that, ladies and gentlemen, get out of here. Happy trading, and I will see you in the next one.